Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Sunday for Sunday, February 6th, 2022. We've got another great show for you this week. We've got members of the media, academia, and financial services all standing by to analyze the news in lifestyle, wellness, finance, tech, so much more. So sit back, relax, enjoy this episode of BRN Sunday. Well, let's kick off the show with a look at what's happening on Capitol Hill. Joining us on the line, they are known as the Legal Eagles, fondly as the Legal Eagles, but we also know them as David Levine, Kevin Walsh. Both are principals with Groom Law Group, an employee benefits law firm based in Washington, D.C. Gentlemen, thanks so much for joining us on the program this morning.
It's great to be here, Jeff. We hope everyone, whether you are under feet of snow or whether you have bright sunny weather, you're having a good weekend. And we got a lot to talk about, Jeff.
Yeah, absolutely. Well, Kevin, and it sounds like someone's opening up a bag of potato chips. I hope if you are, you're going to share them. Kevin, let's talk about a lawsuit that just.
Hey, Jeff. Before we dive in,
yeah,
you should have said it this way: is someone going to share an NFT of the potato chips?
There you go. We're going to go into the Metaverse. See, I just want to tell the audience before we dive in, this is a very fun segment for me before, during, and after. But I have a lot of good fun with these guys, and they're great. They're smart, very talented. But, Kevin, let's come to you because there's a lawsuit that is, I guess, was just issued challenging the Department of Labor. What can you tell us? What's the lawsuit about, first of all?
Well, so everyone may remember the fiduciary rule saga where, from 2010 to 2015, the Department of Labor came out with various fiduciary rules proposals. And then finally, in 2016, they finalized a rule that was then killed by, federal courts down in Texas, and in particular the Fifth Circuit, which, oversees Texas and a number of other states. Well, in 2020, the Department of Labor, went back to the drawing board a little bit and said, if you won't let us do make changes to fiduciary through a rule, well, we're going to provide some commentary on what fiduciary means or what it means, what triggers fiduciary status. And we're going to do that through the preamble to a rule. So through the language that they put in describing what a rule says and what their thought process was in terms of crafting a rule. Well, that was a creative way of, expanding the scope of when salespeople may be subject to fiduciary responsibilities. But it didn't sit well with the Federation of Americans for Consumer Choice. And on February 2nd, they filed a lawsuit against the Department of Labor in United States District Court for the Northern District of Texas. So headed back to Texas, seeking to have, the interpretation of fiduciary in the preamble to their 2020 guidance ruled invalid. So they're asking this court in Texas to say that, this new interpretation, exceeds their statutory jurisdiction, it's arbitrary and capricious, and that it should be set aside in its entirety. It's a little bit of a surprise, and, in some ways it's a challenging lawsuit. DOL was fairly creative here in terms of issuing this guidance and doing it through a preamble to a rule. Typically, when you look at the Administrative Procedures Act, if you're going to make changes to requirements or change people's status on things, you've got to go through notice and comment rulemaking. The way that DOL did this, conceivably they could say, this is just our thoughts. This isn't actually binding. So, there's not really anything to ask the federal judge to rule on. On the other hand, I think the litigants are going to say, there's some fear that in investigations or in lawsuits, folks will cite this language and try to use it for enforcement purposes. So it's going to be important to watch this case for two reasons. The first is, are folks able to, get judges to rule on whether or not things that DOL may issue in preambles, on its website, in advisory opinions, in other forms, can be challenged in court before DOL seeks to enforce. And also, the bigger question, which is, is the Department of Labor right that it has this broad regulatory authority in the IRA space, or are Texas courts and federal courts that, around the country going to tell the Department of Labor once again that, it's not part of their mandate. David, do you have any thoughts on this one?
Yeah, I do. And for our listeners, and thanks for joining us. I think this may sound very wonky, sort of inside the Beltway DC, but why should you care? The very simple reason is the Department of Labor, with one little word or one little not even like informal statement, like we've talked about this with missing participants, cybersecurity, all these things, where the Department of Labor puts something out and they haven't followed the formal rulemaking process that's out there and just say, this is our position, and then start showing up and enforcement. That little activity can drive major changes as it relates to your retirement or your healthcare plans. And here, the Department of Labor basically said, this is how we view things, in a way that really swept a lot more people. And whether you are in favor of sweeping more people or not, it doesn't matter. It's the general theme here. That's swept a lot more people into saying, you could be a fiduciary. And what that means is your business prospects, if you're a service provider, for instance, you have to say, well, what do I have to do? When am I people fiduciaries? I can tell you I see record keepers all the time, or work with record keepers, either side of this, who are like, our business model has to change. Which means you're going to get a whole bunch of papers, and someone might say, now we're providing advice, now we're providing education. and it swings, and it's confusing and hard. And it's also, a lot of people talk about the participant experience. That's part of the challenge here, because it changes the experience, but it also leads to a lot of tension spots as to who's doing what and where, and who's the client and what's going on. There's a lot to talk about. Similarly, if you're a sponsor, trying to understand, why am I getting all this paper? What does this change mean? What's the difference between education? What's the difference between advice? Is there really a line? In some ways, this type of case could really help define, are the rules more fixed and concrete, or are they really shifting sands, like we've seen with ESG and other things over time? So I think there's a lot to be seen here, but as Kevin so well put, we'll have to see where this case goes, but it could explain why you'll get some notifications right soon, and at the same time, they could also only change again. It's my favorite phrase of the year, seems to be hamster wheel. It's the hamster wheel that seems to be the discussion of guidance that we live in today.
So David and Kevin.
And David.
Oh, go ahead, Kev.
Sorry, I mean, David, this is one case to watch, because if they do get to the merits, I think the issues you're raising are really important and really significant, and we could really get some clarity there. But I do want to caution listeners that there is a chance that the way that the case was brought could lead to courts dodging on the issues that really are fiduciary related.
Right. So go ahead.
Yeah.
Go ahead,
So
Dave.
sorry, Jeff. My only comment is you were so right, Kevin, because like, when we were talking about the Northwestern case just recently, one of the things that really comes to mind there is the Supreme Court. Everybody thought it might be a thing saying death to fee lawsuits, open door to fee lawsuits. Instead, they sort of focused and came up with a unanimous decision of the Supreme Court. We could see something like that, where it's a focused decision. So I wholeheartedly agree with you, Kevin. I apologize, Jeff.
Oh, that's okay. No, this is a very informative, I guess. So nothing because it's still kind of going to wind its way through the court. It was as of Thursday that this lawsuit was submitted, so it's got to wind its way through the court system. Nothing for employers to do or participants to do other than talk to their experts, and keep abreast of yet another challenge.
Yeah, I think right now you want to be paying attention to it. But yeah, the big news this week is that it was filed and then a judge was assigned. So we're still we're at the kickoff. We're not near the end of the game.
Oh, very good. That was a good analogy for the upcoming Super Bowl. Kevin Walsh, David Levine, great to talk to you. Thanks so much for joining us. And maybe we'll do a Super Bowl preview next week. I don't know. We'll have to see. Thanks so much, guys. Enjoy the rest of your weekend, and we'll talk to you again very soon.
Thanks for having us on, Jeff. Thanks, listeners.
Bye, guys. Take care. Welcome back. Now we're going to shift gears, talk a little technology, talk consumer products, talk stock market, maybe a lot more, who knows. But joining us on the line, Daniel Klein is the managing editor for The Street, or I should say of The Street. Maybe this is the right way. Dan, thanks so much for joining us again this morning. Great to have you back.
It's actually on the street, Jeff. I actually live in a garbage can like Oscar the Grouch. It's very Sesame Street.
Yeah. Okay. So we'll call. I'll next time I'll say on the street. I wasn't sure, what the proper grammar is. Maybe there's someone out there listening who's an English major or was an English major. They can kind of fill me in. Maybe I'm not the best the talker here. Dan, there's a lot going on in tech and consumer products, but I know you want to talk about two really important topics. One is Meta, which used to be known as Facebook. Their earnings disappointed this quarter, and that sent a buzz through the stock market.
Yeah, well, here's the problem. So Facebook is a really good business. Instagram, WhatsApp, Messenger, those are really good businesses. Investing in the metaverse, which is some vague virtual world that may or may not be a thing on any meaningful level, that's not such a great business. It's not even a proven business. So when you have the CEO of a company who maybe is a genius or maybe lucked into coming up with one good idea that he's leveraged to buy other things, decides to go all in on something that may not work, I think investors are really right to be skeptical. I am not convinced we all want to live in Ready Player One.
Well, and you bring up a good point, Dan. Let me ask you about one of the, I think 2 weeks ago, we talked about Netflix subscribers kind of flattening, which is expected. But I read somewhere that Meta's or Facebook, I'm just going to call them Facebook. Facebook, I know they're really Meta, but Facebook number of logins has really declined by like 500 million. Doesn't mean that the number of users has gone down, but that people may be interested in other platforms. And you said yourself, WhatsApp, Instagram, TikTok, these are good platforms too. So does that have something to do with it?
Yeah, I mean, look, I think Facebook loses users to itself. Like if a Facebook user goes to Instagram, well, they own that too. WhatsApp,
Sure.
Messenger, they own those. I don't think there's some huge migration to TikTok, but I think maybe there's a little bit of Facebook fatigue. I think Facebook has become more how you keep in touch with your family and sort of like the people you went to high school with. And, in my case, people I meet while traveling. Maybe it's not as much a part of your everyday life as it was. But these are still really good products that make an incredible amount of money. But it's a lot like sort of some of the concerns about Google, which we're supposed to call Alphabet, but we're not going to. When they spend all their money on self-driving cars, and all their money is relative when you're a company this big and this successful, it's actually a concern. Like it's just like, why are they focused here? And I don't feel like the problem is that Facebook is slowing down. I feel like the problem is that everything Facebook has tried to create has been a failure. So why do we believe that the metaverse is going to be any more successful than, Facebook's dating site or any of the other ridiculous products Facebook has struck out on?
Yeah. So, Dan, let's talk about the metaverse a little bit. And I mean, I was reading somewhere that real estate is expected to be like $1 billion in the metaverse. And I'm just trying to figure out how, like you and I and the average person like you and I, are we really going to access the metaverse, or is this more, you and I are both Gen Xers, I think, or is this more like a younger person play?
Well, Jeff, I think you and I might have a meeting where we meet in a virtual boardroom because there's a reason we want to see each other, or we have a bunch of people, or maybe we're talking to clients together, or whatever it might be. I think there'll be aspects of the metaverse that make sense. I think Microsoft with the HoloLens is really focused on, metaverse ways that work in the real world, like medicine and architecture, and then in the fun world with gaming, where you can, go play like Roblox in the metaverse, which is sort of a metaverse play anyway. But I think this idea that like you're going to spend $20,000 to buy like a virtual park for your dog, like that's just stupid. Like I might as well get you a star for birthday. Like, do you remember when you could do that? You could order, a certificate that says a star is now yours, which of course means absolutely nothing. The metaverse kind of means absolutely nothing. And again, I've seen areas where people want to use productivity tools. So put on some Ray-Bans and be able to see what a building rendering would look like, when you're standing on the site is really useful. Maybe sometimes going to a virtual meeting would be very useful. Having your day take place in a virtual office is ridiculous, and no one would want to do that. And we're also like, I don't know, a decade away from the headsets being viable. I mean, if you put on an Oculus, nobody's going to use an Oculus for any length of time. And I know that there's better products than that, but we're just not there. And again, look, I think as much as we've all been on Zoom and other things, don't we kind of want to interact with real people? I'm not so sure there's this like crushing demand to go, be in this like fake world. Again, there's gaming stuff like Roblox has concerts where, you might pay money. There's cool stuff that can happen to connect us on a virtual level, but I don't think that's going to replace real experiences.
Yeah, I'm sorry, I didn't mean to cut you off, Dan. I was going to ask, to that point, do you think we're all facing virtual fatigue? You mentioned the Zoom thing. I'm kind of over Zoom, Skype, Teams, etc. Understand the rationale why, but also I'm just not a gamer. I like that interaction with people. Look, sure, I like my phone, but do we put that aside, and does that spell a little bit of doom for some of these platforms?
Yeah, I mean, look, I'm so happy when I can steer a meeting to my phone, and I don't have to sit in front of a big ring light in a studio setting. And there's a lot of meetings I go to that video is required. So it's really nice when I can just be like, my boss wants to meet. And I'm like, can we just talk on the phone? Like, do we have to look at each other during this meeting? And yeah, I think there's fatigue. I also think for gaming, there are going to be gaming uses where it's awesome. It's probably really awesome if you like to play Call of Duty or Star Wars Battlefront, which are both, shootery games. It's probably really cool if you have the right headset and technology. On the other hand, if, you and I want to meet up casually online and play like a little Madden football, I'm not so sure we need an immersive headset. Like in fact, I think we need Sega Genesis controllers with less buttons because we're old and we're not good at these things. I'm not need to play like, Pac-Man 2023 where I'm fully immersed and like running away from ghosts. Like, I think there's a limit to this, and it's cool technology. But Jeff, haven't we been promised like full virtual reality games since like 1984? And it's like a novelty at like certain arcades now.
Yeah, I think you're right. I mean, I don't think it's just you and I. I think people are just hungry for experiences outside the virtual world, and someone controls that virtual world, whether it's an Alphabet, whether it's a Meta, etc. And I think people want experiences. Dan, let's shift gear and let's talk about a company you and I haven't chatted about in a while. That's Twitter. And a few years back, Twitter went from 140 characters to, I think, 280? So they nearly doubled that. But they're, where are they in all this? And I think they have a new feature around, quote unquote, articles. So they're kind of getting themselves back. Are they going to, by the way, are they going to create a metaverse?
So I don't know that you'll see a Twitter metaverse, but I think Twitter has realized that its business should be functionality. So I know, as someone who leads a website, that we have a lot of people reading our stories on Facebook, and very few people reading our stories on Twitter. And that's because Twitter is kind of a bad experience. And this new article thing is about putting sorry about that, glitched for a second there.
No problem.
Is about putting Twitter articles in front of people the way you'd see a tweet. I think that could be a very good feature if it's sort of publicized. If I click on an article on Facebook, I know what I'm getting. I know it's going to load very quickly, and it's going to be a very pleasant experience. Facebook has done a really good job. If Twitter can do the same thing, and I go, oh, hey, I like reading Jeff's morning email, and now it's available on Twitter because it's a convenience to me, I'm going to click on it there, and all the links are going to work and all the other things. That, to me, is a lot better than the current method of linking to an article that sort of leaps you off-site. It's a very unpleasant experience. Like, in general, people don't want to read articles on Twitter. I think this could create it, make it so people do.
Yeah, Dan, going back to our conversation about the Metaverse, I mean, and the people tiring of the virtual world, scrolling, I don't sit on Twitter, I don't sit on social media all day, but, you could potentially miss articles. You could quote unquote, I'm not saying you really miss anything, but there's a lot of like stuff that happens. I mean, there's every second, every half a second, there's a new tweet. I'm wondering if that's really a good experience.
I think it depends how well it's curated. So one of the things I like about Twitter is it does sort of focus on the people you follow, the people you're interested in. I know that, like, I follow the sports teams I like and some of the comedians I like. And, yeah, sometimes I miss what they post, but I can always kind of find it pretty easily. Mm-hmm. So I think the Twitter experience is all about how you self-curate.
Yeah. I think it's a great platform. All these are great platforms, but I just go back to what we were talking about. You know, I think that the purpose here is to entice people to use the platform. They make a ton of money. They make all their money on advertising revenue, right? And how do you get people to effectively be on the site to raise eyeballs, raise awareness, and raise revenue? But I do kind of question, Dan, like the long term. Are we continually destined to have our heads down, looking at our phones or devices, or will we step away and actually maybe instead of reading about climbing Mount Everest, we might actually try it or actually go out hiking on the Appalachian Trail?
I think it's a lot like we talk about with streaming video, mm-hmm. that the next layer of this is better curation, where maybe there's one app that's pulling in all my social media feeds, and I'm saying, you know what, these 10 friends, I want to see everything they post. These 5 companies or sports teams or entertainers mean the most to me, and I want to see their stuff. And then the rest becomes an incredible fire hose that you browse when you can. Mm-hmm. I know that there's days where, like, I'm on my phone a lot where it's like I feel like I finished Facebook. You start seeing, like, posts from friends from 3 days ago because you've kind of, like, logged in enough. Then I think there's days where it's like, oh, wait, like, this person I know pretty well, like, is on the top of Mount Everest. How'd I miss that? To use your analogy from before. So I do think it's all about consuming it better. I mean, it can be very daunting to log into Facebook or to open up Netflix and be like, all right, where do I look? So I think all of these companies are going to get better, but I do think there'll probably be some sort of layer on top of all of this that just makes our consumption life easier. Mm-hmm. Imagine if between episodes of Book of Boba Fett, if you're watching 2 in a night, it shows you, like, the 5 social media posts from people you say you want to see every time they post as soon as they could possibly post. That doesn't exist, but it probably should.
Yeah. Dan, I want to ask you before we go, I know you were angling to talk about Book of Boba Fett. We've often talked about streaming. What's your take on this last episode? I finally watched an episode when it came out, and I don't want to give any spoilers, but I thought it was pretty interesting, and it was a longer than normal episode. But what were your thoughts?
So the last 2 episodes are 2 of my favorite hours of television in a very long time. They're very fan servicey. They're obviously speaking to me as someone who is very into that universe, and I'm being really careful on spoilers.
Yeah, don't spoil it for people, Dan.
But Sorry. They also were very compelling. I thought, look, I think Book of Boba Fett would work, or The Mandalorian would work as a show for someone who doesn't know that universe. There's just times the person next to you would be super excited, and you'd be like, why are they super excited? I think it's handled well. I also think, some things happened in that last episode that rarely happened in Star Wars in terms of raising the stakes and making things, a little bit more real. So, next week is the finale, and I can't promise I will have watched it by when we talk on Friday, but I do usually watch it on Thursday night. And I'm really, really excited for it. But like has been the case with all these Disney Plus shows, all the Marvel, all the Star Wars shows, I'm really sad that for a few weeks until whatever's next comes out, I won't have a show to watch. You and I don't have a lot of time, but I really look forward to that, like, hour a week of just like, wow, I know this is going to be great, and I really want to watch it. And that, I think Disney does that better than any other company on the planet.
Yeah, and do you think Disney, based on Book of Boba Fett, Mandalorian, I think there's going to be an Obi-Wan movie too. Do you think they've kind of righted the ship when it comes to using the Star Wars content?
Look, I was not as negative on the last trilogy as most people are. I do think it's important that in some fashion they continue to advance that story. Whether it's a TV series or a movie, I think they need to go back to Rey and Poe and Finn and that whole world. But I do think they've made it must-watch again. I feel like anything they do, I pretty much have to watch. And the Obi-Wan series is, I believe it's 4 episodes. I think it's like 6 hours in total. And yeah, I can't wait. I'm super excited. Look, I've read every Star Wars book, which don't count anymore in terms of like what's official. But there's so many things they can borrow from those to bring into these. And again, they've done a really good job. And this is true of the Marvel shows for the most part too, where like to watch like WandaVision, you don't have to know all the Marvel lore. You can just watch it as an interesting show. And again, you'll miss stuff, but it's still very, very compelling television. And I can't think, I mean, look, there's some stuff I'm really looking forward to. The Boys on Amazon. There are some other shows I watch. I watch all the DC shows on the CW, but there is nothing I savor the way I'm excited. Like, I was sad when that ended last night. Obviously, it also ended at a bit of a cliffhanger, which I think is, not a spoiler because most episodes do. But I can't wait till next week.
Yeah. Well, Dan, do or do not. There is no try. And that's a great lesson from our friend, Mr. Yoda. I don't think he has a last name. Dan Klein, always great talking with you. Thanks so much for joining us. And we look forward to having you back on the program again very soon.
I'll talk to you next week, Jeff. Thank you.
Bye, Dan. Welcome back. And now we're going to close out the show with a look at markets. And I use that term very broadly because there's a lot of different directions we can go. We can talk about the economy. We can talk about technology. But there's no better person than I think that can break it down in a way that makes sense to a guy like me and possibly to the rest of our audience than the lead anchor for the TD Ameritrade Network, Mr. Oliver Rennick. Oliver, thanks so much for making some time for us this morning.
Always. Thank you.
Okay, so I want to get into a couple things around Meta earnings, but I don't know where you want to start, Oliver. Why don't you take us through what happened this week in general?
Well, context coming into this week that's very important is that the Nasdaq 100, in which all of these big mega cap tech companies preside and have the most impact, that index was entering this week right on its 200-day moving average. That happened on about Tuesday. So the context for the big picture for markets is that you are sitting on an important technical juncture that is essentially just measuring the rate of change for this particular index. It's a very commonly watched moving average. It's probably the second most common technical momentum indicator. And the reason why we watch these things on charts is because it gives us an idea where things become abnormal and where you should be able to expect some degree of support for price or resistance in price. And so when you come into this week with the NASDAQ at its 200-day moving average, you kind of have a clear battleground set to see whether bulls are going to be able to take control again or if bears are still in control. And the reason why this particular technical level is very important is because on the way down, we just crashed right through that. And you're not really supposed to do that, quote unquote, supposed to. When you have a long-term moving average that has been consistent for the better part of a couple of years, that's generally thought to be a pretty big area of support on the chart. And over the last 2 weeks, we ripped down through that when the selling really became panicky to the downside. So this week's really important because it's happening at a important juncture. It's happening at a technical level that if it does hold, then should be a pretty big springboard to go back and test the old-time records. Or if it does not act as support, that is another big letdown for bulls, and it probably means that the NASDAQ then is headed towards a bear market like we've gotten in the small caps. So that's the first context. And basically the short of it is we have been duking it out back and forth all week with some pretty major bullish momentum, but then also some pretty serious bearish knockback. That has been a back and forth that's taken us into Friday, sitting just a tiny bit below that moving average. So basically right now it's kind of a draw at this moment. And earnings obviously playing a big role in that as we got the big rally to follow on from Apple and Microsoft. And when we get that in earnings like Amazon, that helps. But obviously with Facebook, it does the opposite. Alphabet also had this big pop on earnings. But this week, the Facebook story reminded us that basically the theme of slowing growth for some of our most important companies runs very deep within the tech sector that leaves a few businesses unscathed from a slower rate of growth post-COVID. And that's what the market is wrestling with.
Yeah. Oliver, just to follow up on the Facebook/Meta conversation, and we had a conversation earlier with our tech reporter, Daniel Klein, just about his perspective. But how do you, there's a lot of advertising revenue that Facebook generates, and they all these social media platforms generate a lot of advertising revenue. But I mean, the fact that they've had, I think, 500 million fewer logins. What does that mean for? There are a lot of small businesses, Oliver, that use Facebook as a tool to generate businesses. Should we be concerned that this avenue for businesses isn't as for small businesses isn't as resilient as it could be?
Yeah, possibly. It certainly is possible. It's also possible that the economy for those small businesses is not very strong right now, and thus their advertising is dropping as well to a certain extent. So you kind of have seen some businesses pull back on advertising. It certainly does, though, just kind of question how much the digital world is going to inform the real world business economy. And that's kind of a very big post-COVID tension point for markets that is at the root of a lot of this volatility. Is a company like Facebook obviously played a big role in the digital economy to provide an advertising marketplace for businesses. But the stock market in the investing community got a little bit carried away last year in its assumption of how much the digital economy is going to be synonymous with the real economy. And that's basically why we're getting all these big sell-offs, because people got very, very convinced that the digital regime that we survived COVID through is going to be something permanent. But as we can see with these growth rates, we're not even in a true reopening of the global community. We're in very early stages still, and the growth rate is already slowing in some of these businesses. So it's pretty clear that the digital economy peaked out during COVID.
Let's talk a little bit about the yield curve and bonds, and interest rates were. I think that was like the big topic last week with the Fed meeting. The yield curve has been flattening, and what's your takeaway?
Yeah.
What's your feeling about that flattening, and what does that mean for bond holders and bond investors?
Well, right now it means that they're losing money on the bonds that they hold. It also means, though, that as those yields rise, that it becomes obviously a more reasonable alternative than it had in the past with a very low interest rate. But as far as the market's concerned, it's really kind of at a lose-lose situation to some degree, because we are getting some pretty big moves in the long end of the bond market, like we saw on Friday after the employment report, with the 10-year yield spiking. But to your point, the yield curve is not widening out. So you have an issue here where fast moves higher in long-term bond yields are disrupting the stock market, but the short end is moving so much faster due to the Fed's response to inflation that the bond market yield curve is flattening and signaling a concern about the economy. So at this point, bonds really are only becoming a headache to investors. And it fits pretty much in line with the overall growth point from tech, because you have two forces that are different, but very related and are going to be working in tandem with one another. And that is the status of the reopening and the strength of the economy next to the Fed's necessity of fighting inflation at this point. So it looks like the regime we've been dealing with is very sticky, very real, and probably can last some time. And that regime is the Fed fighting inflation, a decent amount of growth, but not enough to keep people from being worried that the Fed will overstep in a stock market that's volatile.
Yeah, and last question on the inflation front. I mean, you're seeing people paying exorbitant prices for food. Obviously, you have to eat to live. Home prices going through the roof in a lot of major areas.
Yeah.
I mean, what's your takeaway from that? I mean, does that at all dampen consumer sentiment? I don't want to ask you to prognosticate, but I just want to get your, if you're the average consumer out there, person, the regular Jane Doe, John Doe out there looking to buy things, they're paying a lot more for their family's needs.
No, it absolutely does. and we've already seen some of this show up in the numbers, with some degrees of consumer data slowing a little bit lately. But that is the big risk point, and there's another factor that goes into that, which is the stock market, which is why we have to be very aware of what's going on in stocks, because if stocks decline too far, that's going to add additional pressure onto a consumer that's already straining, whose household is more tied to the equity market than ever. So, I mean, we are really on some pretty thin ice here, which is why markets are volatile, rightly so.
Yeah, well, let's hope February. We just started February, but let's hope February breeds a much better outcome. Oliver Rennick, thanks so much for joining us. We appreciate it, and enjoy the rest of your weekend, young man.
Appreciate it. Thank you.
Bye-bye. Well, that wraps up this episode of BRN Sunday. Have a topic of interest, someone you think we should talk to? Well, hey, drop us a line, and don't forget, for all the information in lifestyle, wellness, finance, tech, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to see the latest content or search our archives? Well, check out our website, www.broadcastretirementnetwork.com, and of course, our streaming partners, Amazon, Roku, Samsung, and over 100 more. We're back again tomorrow for BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.